Welcome to Kitco News. I'm Niels Christensen. Joining me today is Kristina Hooper. Thank you for joining us today.
Thank you for having me.
It's been a busy day. You've given a presentation on at Inside ETFs Canada here on sort of the outlook for the global economy. But we just had the Fed. They're no longer patient. Let's tie that into your presentation. I mean, how does this impact markets and the outlook for the global economy going forward and the U.S. economy going forward?
Well, it's certainly calming to stocks. Now, the Fed may not have delivered everything that stocks were looking for, but I think it's enough. And certainly, if it's not enough, Jay Powell in his press conference will do more to soothe the stock market and keep stocks at elevated levels, because really, at the end of the day, this is a story about the central bank being willing to step in and help support capital markets.
So, do you think we get a July cut? I mean, markets basically July, the markets see July as a sure thing. Do we get that? And also, nearly 4 rate cuts are priced in this year. Do we get that? I mean, is that a little too aggressive?
So what I would say is that I think there's a very good chance we see a rate cut in July, but there's no certainty. Maybe we'll have more certainty after Jay Powell's press conference, but it seems as though the Fed, just by making sure that investors know that it stands ready and willing to step in, should be enough.
Okay, so looks like rates are heading lower. What looks good in this environment? Obviously gold has been responding really, really well to these shifting interest rate expectations. Do you like gold?
I do. I think gold makes sense in a portfolio for the long haul, just because of the diversification it offers. But certainly gold is looking attractive in this environment. Some could argue that it is a helpful gauge of perhaps investors' concerns about recession possibilities. But for a variety of reasons, gold looks attractive.
Recession fears, I'm definitely seeing those peak. Invesco, what are you guys forecasting for, for global growth and U.S. growth as well?
So our base case is an economic slowdown, but not a recession. And that's because of central banks' willingness to step in and support the economy. And so what could be worse is unlikely to be worse. We're likely to see a pretty modest economic slowdown for the U.S. in the next year.
Well, I guess we have seen this. I mean, we have seen equities sort of take momentum away from gold. Could that be the case too? I mean, if the Fed comes in and says, hey, we're willing to backstop, we're willing to do whatever we can to support this historic expansion, does gold still look good a year from now if equities do rally on lower rate expectations?
Gold can still perform well a year from now. There's always that potential, given that there's something of a dichotomy going on, where we see optimism priced into stocks, but fear priced into treasuries and, to a certain extent, gold and Bitcoin. And so that can exist, that duality can exist for long periods.
That's perfect. That's really all the questions I have. I thank you very much for your time. That was fantastic.
Thank you.
Thank you for joining us at Kitco News. Stay tuned for more coverage.